Hey, 11:35 on the Big Show clock. Bob Quinn in the Big Show Garage today, being brought to you by the Iowa Agriculture Water Alliance. Clean water in Iowa starts here. You bet it does. We have a special guest tomorrow talking Clean Water Wednesday on the Big Show, and he'll be joining Dwayne tomorrow during the Big Show. We're in the Big Show Garage today. On the telephone line with us, we're talking markets with Brian Hoops right now, Midwest Market Solutions. Brian, big up day yesterday. Do we have a turnaround Tuesday going today?
Hey, Bob. Well, it's not as exciting as yesterday where we saw huge gains in corn and soybeans, and you can blame that on the funds like yesterday. We saw massive buying, 38,000 contracts estimate was how many contracts the funds bought of corn, 31,000 beans. It's much more subdued today. We're just not seeing that massive buying like we did yesterday. And so it's led to a little bit of hedging that's capped the rally. Producers out there seeing November beans getting close to $12 again, back into $11.90 range. That corn crop at $4.60, not a bad price, but we may have a little bit more upside there. At least I hope we do. But there's a lot of old crop inventory that's getting sold here, and that's capping the rally for corn, soybeans, and to a lesser extent, we're seeing some wheat being moved as well.
Crop conditions out yesterday. Any surprises?
No, I really don't think so. The crop we think is good crop for the most part. It's not as good as last year, and that's replicated in these crop ratings that came out. 67% good to excellent rating in the corn. Last year we were 74. The average is 64, so we're better than average crop. Not as good as last year. And soybeans are 64%. Not as good as last year, but again, above the average, which is 61. So it's a good crop, maybe not an outstanding crop like we had last year, and that should give us a better, higher low instead of the lows we went last fall. We should not really approach those levels, especially with better demand trends for corn and for soybean markets as well.
What do you think it's going to take to move these markets here over the next couple of 3 weeks?
Certainly it's going to be weather. That's 95% of our pricing influence right now. We can talk about export business. We can talk about demand. There was a private sale of meal this morning. None of that is really going to really drive the market. There were some rumors yesterday that China had bought up to 10 cargoes of soybeans. It looks like they bought 5 cargoes, but it was really weather that drove us to those big gains that we saw yesterday and some follow through in the overnight and this morning. So that's what's going to drive us here in the next 2, 3, 4 weeks is weather conditions. It's going to be above normal temperatures throughout the Corn Belt, precipitations below normal for most of the belt right now, with some areas, maybe the Eastern Belt, back to a normal. And if we start to see changes in that weather forecast to increase rainfall potential like we saw on Thursday, we will see prices move lower. We're going to be very sensitive to the latest weather forecasts.
So what's your strategy right now as far as maybe building some marketing things over the next couple, 3 weeks? What are you looking at?
Yeah, certainly if you are holding old crop positions, corn, soybeans, you're running out of time as far as rallies go. We're here in July, and pretty soon we'll be through the month of July. You just don't have many more opportunities. So I think that it makes sense to go ahead and merchandise some of the product if you're holding some of that old stuff. Now, new crop sales, you can advance sales here on this rally. If you've had hedges and took them off at lower price levels, like into some weekly support like we talked about, maybe you're getting to a point where you want to start to reestablish some of those hedges. November beans around $12, corn maybe around $4.65, $4.70. Could look pretty good over the next couple months if we turn back lower, get some good rains until we ascertain how big or how small this crop actually is going to be. So I don't want to get too aggressive as far as the hedging goes, but certainly if we get into $12, $4.65, $4.70, you really have to concentrate on doing something like that.
Well, let's switch gears and look at cattle trade. What do you think will be as far as cash cattle this week?
Yeah, unfortunately, I think we're going to be lower on the cash markets this week. It could be $3, $4. That's kind of how we are looking at the market right now. And what makes this market very difficult is we traded 255 roughly last week in the Southern Plains. Futures are 238. That's a $17 discount to the cash. Even if we come down a couple dollars, we're already heavily discount. And you look at the October futures, that's another $5 cheaper. It's holding over a $22 discount. So the market's really anticipating cash is going to come down, but it's priced in the futures market already. It's very hard, if not impossible, for producers to hedge those futures just if they expect cash is going to come down, because the market's already way ahead of us. It's telling us the prices are going to come down. Now, boxes at midday were higher. That's what we need to see. Typically, this is a poor time of year for box beef movement and for values. Normally, we see those values turn lower. Hopefully, we can stabilize here at these levels. And in fact, if we can move higher, that'll stabilize the cash. And then it means the futures are way undersold.
Well, Brian, we're going to let you go for an hour and 10 minutes and then get back with you towards the end of the program and maybe build a little more strategy on grain and soybeans. In the meantime, folks want to visit with you about markets. How can they find out more about Midwest Market Solutions?
You can find us online at MidwestMarketSolutions.com, or you can give me a call directly, 417-501-5132.
We speak farm. Today's top stories in agriculture and the analysis you trust. This is The Big Show.
12:54 on the Big Show clock. Bob Quinn on the Big Show today. Big Show Garage Day today. Thank you so much for Dwayne standing by there and keeping us updated on all the market activity. And that's where we're going to stop the Big Show today, or I should say wrap up the Big Show today, is doing some analysis on where this market has been moving. Yeah, we have a project we're still working on here, and we'll keep you updated. You have to watch our social media to find out how we're doing on that particular piece of project, particular piece of iron we've been working on here. But Brian Hoops is in with us right now, Midwest Market Solutions. Brian, what's going on in the marketplace? I should ask you, what do you expect over the next couple of weeks, corn and soybeans?
Yeah, since we've talked last about 90 minutes or so ago, we've got a little bit of buying interest coming into the grain markets. We're up 6 cents now in corn, and beans up over 4, and that's added 5-6 cents since we last talked, and that is because the weather forecast at midday confirming that hot and dry scenario for most of the Corn Belt for another 6 to 10 days. So as these weather models continue to produce forecasts in the morning, midday, the afternoon, we're subject to change. And so the markets can change pretty rapidly and most likely will. And when you see big gains like that, it's confirmation that the forecast is still going to be warm, still going to be dry. I would suspect we are going to be higher again tomorrow for the third day in a row. You get post a holiday like this, 3-day weekend, you usually have a lot of pent-up momentum, a lot of buying interest that needs to be let loose, and that's what we're seeing here. So I would suspect over 3 days the funds will be fairly active as they are buyers again once again today. So, we're very close to that $12 mark in November soybeans. Certainly would not rule out 12.10 and maybe even a challenge of the high at 12.14 at this stage of the game. We could see that those old highs that we posted back in May be tested here if that dry pattern continues, and the same thing for corn. If that dry pattern continues, you would suspect 470 to be tested. We're around almost 465, 464 right now, so 470 seems likely, and maybe even a test of the 480 resistance point before, as long as the weather doesn't change and stays very warm and very dry.
Things happen quickly in this market, Brian. A week and a half ago we were talking. We would have thought we'd already put in the highs on this crop, and here we are talking about maybe inching up against and making new highs again. Yeah,
like you said, things can change, and the thing that changes that you really can't predict more than just a few days out is the weather, and that's the thing that can drive us to new highs. And it can change once again. We can start pulling back, but I do think that the market showed that it had eliminated all the weather premium out of the corn soybean markets by middle of June. And when you do that, the market's going to be very sensitive to put that premium back in. And I think that's what we're seeing now is adding that premium back in. We can remove it just as quickly once we get past the growing season. It's going to really get down to how big this crop is. If we're having trend line yields, if we have something below trend line yields, boy, we could see a market that's very explosive into 2027.
Brian Hoops, what's your phone number? How can we get a hold of you?
417-501-5132 is my number, and you can find us online at MidwestMarketSolutions.com.